Hey everyone, good afternoon. Lost my feed about 20 minutes ago. Apologies for that if anybody was watching. I closed the tab by mistake, but we didn't do anything. We were sitting here on our um, pin that we identified this morning right here at 55.50, 55.55. Nothing but wicks above it as the dealer, when it breaks, they're delta hedging above it and they brought it back down. This morning it popped um, on the initial open, and then they immediately brought it down once it tagged our daily one. So everyone holding for that R1 got their faces ripped off. Um, that pivot point. So what the interesting thing about today was that our break even worked. We didn't hit the 54.82, which was our go line. Remember, the market report said wait for 54.82, and then if that broke, we would be looking for these lower levels. So it got pretty close to the go line and turned around right at the daily 2, the R ball daily 2. So we had our 1 hour IB daily 2, the R ball daily 2, and then the daily 2 daily. So this is the 1 period versus the 14 period. And so we're, getting into the 68% of the daily range. So they turned it around, brought it back in, and you can see the VIX centered around the daily mean. It did break this daily too, and I thought we were going to get that sell off, but then they reversed it and brought it back in. And that's about the time that Infinitus noticed the volume coming in on gold. And so they posted that they were seeing, a top, and it actually uh, faked out a little bit and then came back down at the last bit of before the close, and now it's coming down. So be real careful. We could be close to a top. Could be. I'm not saying it is. There's still a little bit of room on the weekly to get to the 7-day ones. 7-day and weekly one, and then the monthly has a bit of room on it as well. 33.83 for a 2, and that's where these other tops are hitting. The 30-day 2 is at 33.83, and 33.80 is the weekly one. So we could see that wick, that pop and drop in here. Nothing but wicks inside of here so far above this 33.70 to 80 level. So, like I was telling him, it could be any time that we get that gold turnaround because we're above the quarter. I mean, it's April, right? It's not even at the end of April. So April, May, June, we're in the first month of the 3-month quarter, and we're already at 1.5 times the quarterly range. That is just ridiculous. Nosebleed section. So if I restore this and put the RSI on here, I think that would demonstrate to all of us just how overblown this market has gotten. So we topped out and we're coming down, yet the price is still going up. So you see that divergence. The momentum, the RSI, the volatility is coming down, but they're artificially pushing it still higher. So there's a little bit of divergence with the RSI. That's interesting. And my volatility is coming down. It's not going out. I mean, it went out just a little bit, but we want it to come down and bring Well, we want it to go out, actually. We do want it to go out so it will come down. We don't want it to go up on outlaw. I'm just, we do want the volatility to increase a little bit above, what's the level? 85.2 points. So anything over 85 points a day is the breakout level and will signal that trend resumption. Even though it kind of looks like you're already in one, but it's at so far outside the realm of where it should be trading. Um, where, everybody's expecting to see a pullback. So that would coincide timing wise with the ES going higher. So we had that big sell off and the largest recovery in history, right? Um, I don't think that's ever happened before. We'll have to go back and check the stats on that, but a huge sell-off preceded by, an almost total recovery. Here's our gap line where we're stalling, that Sunday gap. We're sitting on it right now. Where we're at, right here. Make this yellow and thick. Well, that'll work. All right. So we're real close to getting back up there and filling that gap. But that's, what we need to clear is that 5560 area, 5570. And that's what they were trying to breach today. And it rejected back down. So the max pain got taken away off the table. Unless they go back for it. Now we have 2 more days until the month end. And we could be seeing, a further attempt to put the gap on, or the dealer, who's going to be losing money hands over fists if that happens, right? And we'll have to delta hedge it. If it starts going, it will be delta hedged, is what I'm trying to articulate. So they're going to be participating on the upside because they're already so far away from their max pain. That's why I thought they would be bringing it back. But they still have tomorrow and Wednesday to bring it back down. So don't, you know, think that we've got a gimme on that gap fill. Um, they would do better by sending it back down, but I'm not sure if they're going to get their wish on that. Another thing to keep in consideration, I posted this morning for the subscribers, we've got some higher time frame levels here. 5578 is a 4-week 2, so that's a monthly 2. And it's also, you can see here, right on that close, 5579.75. So within like a point of that close. So this is the level that you want to break, is that 4-week 2, 68% of the monthly range. Otherwise, we could be coming back down to that 5460. Let's go over to Quick Strike real quick and see what the max pain is for today. Come into our open interest. Open up for tomorrow, the 29th. And then here I can click it right there. And 5424. All right, 5424. So we want to go look at the options. Let me come back to my sheet. So it's even dropping 54.24. So it's way down here now. So they do have a put on it, but the call, look at that, 5,700. There's your liquidity. And the gap fill, we take a look at it. The open that it went through is at 56.72. So 5,600, where that big call is right in the middle, looks like. So if it looks like that close up there where it would have gapped down from 57.12 to this open. Be 56.31. So maybe they're doing, yeah, here it is. They're doing it from the open to open. And that 5,600 is right there. So that's what they're doing. They're doing a half gap. Oh, and this is 5,700. I'm sorry. No, they're not. They've got it all the way up. My apologies. I need new glasses. So they are filling the gap almost. $57, $12.25. So 5,700. Yeah. And they do have another one right in front of it at 57.10. So that's going to get filled. So they are filling the gap and they're taking it up, because that was going to say they usually take it to the close, because that's where it started from, off the close. Yeah, close to close. Close to open, sorry. All right. So that makes more sense. All right, get it together. So hopefully they'll give us that gap fill versus turning it around. And if that's the case, the gold is going to start sliding. We get a new month, April 1st, and so we'll get brand new monthly levels to play with. And the quarterly will be above the quarterly threes, and we could get up to 5,800, 5,845, 56,000 without any problem at all. So despite all the gloom and doom that you're hearing everywhere, it looks like, the equity market is doing pretty good, holding its own. It's back above the quarterly three, and they are trying to fill that gap. So once the gap line goes, that's where we want to start playing. I think the way that they were set up today was that they would, be going with it, but we'll have to see tomorrow what happens and what they do overnight. They could be dropping this at the Asia session pretty quickly. For NQ, it's pretty much stayed in lockstep, went down to the daily twos and came back in, and we're just right in the middle of our daily distribution. So nothing changed. Small flat ranges but very holding the ranges stable. So there's not any panic. There's not, a lot of, foreign sellers back in the market. Thank God for that. So that gives the price a chance to stabilize. And like I said, we have brand new ranges April 1st, and we will start getting ready for that. Hopefully, they'll make some announcements soon on the Ukraine war settling, and get some tariff resolutions. A lot of countries have already, started saying that they would work with the United States on hammering out their trade tariffs. So yeah, I think it would be positive. I know that we would like to keep trading with China, but just at a more even um, level, and not flood the market with inexpensive products to undercut our production. Yeah. Okay, so I'm sure it can be worked out. I mean, you would think that they would want to work it out. So it's all good. But yeah, one of the largest rally backs probably in the history of the stock market. We had a lot of stuff going on. We had that long put for the JHEQX got hit and rolled over, 4 or 5 times, 4 times. And it was 1, 2, 3, 4, 5, 6 times. I guess 1, 2, 3, 4. However you want to count it, 4 to 6 times. But that's so unusual. This is usually a very short-lived thing, and it goes right back up. This came much deeper, and then we started gapping up, but we do have two nice gaps, sending it back up. This is good through June, so we would be staying above 52.70 through June. 52.9. I'm sorry, what is this? 52.90. Sorry. All right. So pretty textbook today as far as, staying inside the ones. And we didn't get our point range between, the one and the two, that get up to the two. We flattened out. But a lot of that has to do with the positioning of where the market is, where the dealer flow was, and them holding things at a pen for a while, both up and down, before sending it back to the Globex Open. So pretty textbook. I've got the 300-minute, the 60-minute, and the 15-minute on the chart, and I was able to identify at lunch that this 15-minute flipped first. The R vol went inside the H vol range, where for the 60-minute, that's 300-minute, they were still running outside. That PT3 was still running 46.75 versus 47.25. It just went inside on the 60-minute or the 300-minute as well. So these ranges are collapsing. The R vols are coming back in for the first time. They had been well outside, the R vol had been well outside the H vol. So, but we were pinned today, last couple of days on this top, so that vol would come in and contract. Unlike, the previous sessions where we had such wide volatility days, we've been sitting right here at the bottom of the daily distribution at the daily ones. See how wide it is? It's just huge. Okay. All right, guys. Well, are we going to get a gap and go, or is it going to, crush down so that the dealer can get paid back down to their max pain level? And like I said, the dealer makes the most money sending it back to the max pain. Um, and that is 54.25. If we want to mark our charts, oops, there we go. That's their target, and they have 2 days to get there. We have an easy path. That's 120 points. And the daily one is 89.70 or 69.70 points, 69.75. The daily two's 139 points. So to get to a daily two and a downtrend is super easy. It can be done in one day. Just saying, it's within reach. And they know that too. So if they're not going to fill the gap, then they know that they're well within striking distance of reaching it. So just keep that in the back of your mind too. If we do start going down, we know what their most pleasure is. For the dealer, it's the most pleasure. I don't know why they call it max pain. I guess when you get away from it, we'll be looking at their call break evens to see where their pain points are for that, for the daily, for tomorrow's 0 DTE. All right, we'll get those reports out shortly. I'm going to be posting a Globex report um, within the next hour, and catch you in the morning for the pre-market. So y'all have a great evening, and we'll talk at you soon. Thank you so much.